Okay, so here's a hypothesis. We're looking at Carnival. We're looking at the chart from around 2000 through to around 2000, January 2020. You can see the trend is at 5.55% per annum average. We can see this is roughly speaking the support line here, 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 and here. So this is a support. Under normal conditions, that would be a support. Under normal conditions, we would expect the price to move back to the upper side of this channel at some point. That would mean it put it up around 50, perhaps something like that, £50. It might take a couple of years, 2 or 3 years to get there, but I mean, you can see that normally the resolution, it hits the bottom channel, oscillates and then picks up, oscillates, picks up, and so it goes. So this is a hypothesis, right? Carnival. So if we then move forward and have a look and see what's happening on the screen, we can see that COVID caused it to drop right off the cliff here. And we are now currently priced around 12. So if we say that at some time in the future the price might be 50 or so, when we get out of this horrific pandemic that we're in, and even with a retracement back up to support becoming resistance, we'd end up around 30 something pounds, 32, 34 pound. Then a move from 12 is almost a threefold increase in price. So that's a hypothesis, okay? That's all it is. Currently we're in this zone here. Let me zoom in and show you where that is. So you can see that the last real high was there, the last real low was there. We're in this zone. Typically a breakout above this would suggest a move and a breakout to the upside. So if one was considering it as a safe trade, you might wait for the breakout. Alternatively, you might say, well, right now we've got this downtrend which may follow through and it may not, but look, this is likely to go up. This red line, this is the 50 period moving average. This blue line is the 200 period moving average. So currently we're between the 50 and the 200, but we've broken up above the 200. So that to me suggests that we're getting strength back in this particular market. Let's zoom back out again and we look at the downtrend over the most recent period of time. And this is this line down here. So if we were to go back and hit this downtrend line, we'd end up at around 28, something like that. So my first target price would be 28, and I'd be taking that as my first intention. Then I'd be looking to manage the trade. Will it pan out? I don't know. Let's have a look at the data behind it. This product is ShareScope. It gets all the data regularly, so this is the current data on it. And currently we don't have a PE. The price to operating cash flow is negative, which is incredible really. Price to net asset value is 0.53, so the net asset value according to the books is twice what the current price is. It's currently giving a yield of 3.42. It may continue doing it, it may not, who knows. But anyway, a yield of 3.42. And all the other values down here. So the Altman Z is really poor. Bankruptcy risk is really high, so you are taking a risk. The Piotrowski score is also very low, so one is taking a risk. So this is a risky trade. However, Carnival is one of the major cruise lining shipping companies in the world. And as the coronavirus is dealt with, which it will do at some point, then arguably a cruise liner is actually a safe environment to travel the world, because you're not being exposed to other countries' infections and so forth in such quite the same way. Much more controllable environment. Okay, so that's just a hypothesis. So there you have it. That's the trade. Your shout whether you take it or not. I have personally got skin in the game. I've invested at this price here. If we look back, it's the same, more or less the same price as it was back in 2009. So we're talking about the same price as it was 11 years ago. And you can see that was a supported low. This was a supported low. That was a supported low back in 2003. So if it doesn't go bust, it's a high probability trade for the upside to about £28. Could go up to around this level here, 34. If it resumes its prior trajectory, it'll go up to about 50, 54, maybe even 60. So there's a lot of upside. It's one of those things that you could risk a little bit, I think. There you have it. Oh, by the way, of course, if you decide to do it, all the risk is on you. It's your decision. Bye for now.